Welcome to your custom deep dive. We're here to unpack complex info into, well, clear, actionable insights.
And today we are definitely diving deep. We're looking at the Q2 2025 earnings for GULF. It's certainly one of Thailand's most watched stocks.
Absolutely. So our mission really is to pull out the most important nuggets for you, whether you're an investor glued to the market.
Or maybe just curious about the big forces shaping the Thai economy, right?
Right.
We'll hit institutional investor takes, GULF's financials, where they're heading operationally.
Price targets, future outlook, the whole picture.
Exactly.
Now, GULF has been expanding like crazy, hasn't it? Moving from its power roots into, wow, global tech, digital.
Aggressively.
So the big question a lot of people are asking is, okay, is GULF still fundamentally a growth stock? Or is it maybe hitting a ceiling, saturation point where the opportunities get harder to find?
That's the core tension, yeah. What do these Q2 numbers actually tell us about the long-term runway or the potential risks for you?
Okay, let's unpack this.
So first off, it's important to see GOLF not just as like an energy company, it's really a holding company.
Right, led by Sarah Thrutanavadi.
Precisely. And it's built on three main pillars. Energy, yes, but also infrastructure and utilities, and increasingly digital.
And that digital push is fascinating. The shift beyond traditional power generation is, well, it's pretty strategic.
It is. They've moved into global tech, digital platforms, data centers, even, as you mentioned, dipped their toes into crypto.
Which brings risks, of course, expanding so fast into areas where maybe they don't have that decades-long track record.
That's a fair point. It highlights the calculated gamble, you could say. But to really get GOLF's identity now, we need to look beyond just energy and see how this diverse empire is actually performing.
Okay, so let's check the vital signs of the major holdings. We've got data from Jan 2nd to June 4th, 2025, plus the 3-year trends.
Yeah, 2022 to 2024. These really show the company GOLF is becoming.
All right, starting with AD Vinci, the big telco stake. Seems like a steady performer.
Very steady, up just over 2% year to date, but look at the 3-year, nearly 25% gain.
So it's kind of a reliable anchor in the portfolio, isn't it? Providing stable income, decent dividend yield too, about 3.6% year to date.
Exactly. Then you've got THCom, the satellite business, a bit rougher this year.
Yeah, down sharply over 33% year to date, though still up over 3 years, interestingly.
It shows that volatility, right, in those emerging tech spaces compared to steady telco and K-Bank, the bank.
Down slightly year to date, about 2%, but up almost 10% over 3 years. But the dividend, that's the story there.
Huge dividend yield, yeah, almost 8% year to date. So this mix, strong income from telco and banking, it really shows GOLF's strategy to balance that risk and find multiple growth paths.
And GULF itself, the source has no YTD data because of the merger with INPCH. It involved a name change.
That's key context, yeah. So let's get to the core numbers. How did Q1 actually shape up? That sets the stage for Q2.
Okay, Q1 performance.
Well, they didn't just meet expectations. They pretty much smashed them. Reported net profit of 6,564 million baht. That's up 55% year over year.
Wow, 55%.
And importantly, even if you strip out the special items, the normal profit was 6,506 million baht, still up 32% year over year, and actually beat analyst forecasts by 9%.
So it's not just accounting tricks. The underlying business is firing.
It really signals that their diversified strategy, especially in digital and infra, is delivering tangible results.
Okay, that's a strong lead into Q2. What drove that Q1 strength specifically?
It was pretty diverse, actually. You had the full quarter revenue from the GPD power plant units 3 and 4.
Right, they came online in 2024.
Then more profit sharing from the Hin Kong plant, units 1 and 2, which started up in March 24 and Jan 25, so new assets ramping up quickly.
And the Jackson plant in the U.S., that was a big turnaround.
Huge turnaround. Contributed 30 million baht profit compared to, 195 million loss the year before?
That's quite a swing, like hitting a home run after striking out.
Exactly. And don't forget, AD Vinci, huge role there too. Profit share up 32%, reached over 3.3 billion baht.
Driven by rising ARPU,
Yeah.
average revenue per user, and that AD Vinci TTTDD synergy.
Underscores how those strategic investments are paying off, yeah.
Okay, there were a couple of smaller things too, right? SPP margins softened a bit.
Slightly, yeah. Gas prices ticked up quarter on quarter, about 4.7%. That's still down year on year. And the F2 rate, the fuel adjustment charge, that dropped slightly.
Okay, so a few moving parts, but overall a very, very positive Q1.
Definitely a strong setup. But honestly, those Q1 numbers are just the appetizer. The Q2 forecasts, That's where it gets really eye-opening.
Oh, how so?
Well, Phillips Securities, for example, they're expecting GOLF's Q2 profit to hit a massive 52 billion baht.
52 billion. Okay, wow, that number definitely jumps off of the page. Can you unpack that? What's driving such a huge forecast? Is that all operations?
Good question. No, that eye-popping figure is largely due to special items. That forecast includes a huge 45 billion baht gain. It's from the fair value adjustment of their AD-Vancy investment because of the merger, plus another 300 million from FX gains.
Got it. So important to separate that out. What about the normal profit then? The core operations, excluding those one-off, what are analysts thinking there?
Even without the special gains, the normal profit forecast for Q2 is looking very strong. Krungsri is thinking around 6.3 billion, Yuan is up at 7.5 billion.
And Philip?
Philip's specific forecast is 6.5 billion. That would still be a new quarterly record for normal profit. Represents like 22% growth quarter on quarter, 37% year on year.
That's incredibly robust, even without the merger gains. So drilling down, what's driving that anticipated growth, the recurring stuff?
Well, seasonally, you expect higher electricity sales from the Thai IPP plants during summer. That's one piece.
Okay.
Then the Jackson plant in the U.S., expecting further profit increases there. They're getting higher capacity payments from the PJM market starting June 25.
Right, that U.S. turnaround continuing.
And AD-Vancy keeps delivering. Estimated profit share around 3.4 billion baht, up 1.4 billion as GOLF fully recognizes that direct 40.4% stake now.
Plus dividends from K-Bank, right?
Exactly. Anticipating dividends around 977 million baht from 2 XD rounds. That should add maybe 1 to 1.2 billion to Q2 revenue. These direct holdings are really paying off.
And the new stuff, the data center.
Yeah, that's really forward-looking. The 25 milliW data center started commercial operations in May 25. That's a factor.
And the Google Cloud partnership, the sovereign cloud with AI.
Should have been operational in Q2. That's Thailand's first. And you hear buzz, potential interest from platforms like TikTok. That's a big leap from just power plants.
Definitely. And efficiency gains, too. Lower gas costs, more solar.
Yeah, improved gross profit from the core power and SPP businesses. Lower gas costs help, plus more solar sales, which is partly seasonal.
But there's a slight drag, isn't there? Interest expenses.
Right. They issued 30 billion in bonds late Q1, so higher interest costs will temper the profit growth a bit. Lots of positives, but yeah, that's an offsetting factor.
Okay, so looking bigger picture, strategy-wise, GULF's projecting 25% revenue growth for 2025 overall.
Ambitious.
Very positive outlook.
Yeah.
Which makes the recent signals about their investment plans.
Well, interesting.
Yeah, this is where it gets a bit confusing, right? The messaging seems mixed.
It really does. Back in April, the CEO, Sarath Ratanavadi, sounded really optimistic, talking about investing tens of billions of baht in data centers, power plants, domestic and international.
Right, he even specified 70-80% of a 20-30 billion budget for renewables, wind, solar, hydro. Talked about buying another U.S. gas plant, adding 1,500 milliW capacity this year. Very bullish.
But then, just 2 months later, June 2025, the tone shifted quite a bit, much more cautious, citing global economic, political uncertainty.
Saying no plans to acquire new energy assets, including in the U.S.,
Yeah.
and not investing in new projects or M&A because the economy is not good.
Exactly, and even mentioned maybe selling some assets to boost cash flow. It's quite a contrast in just 2 months.
It's a bit of a head-scratcher.
Yeah.
So what gives? Are they hitting the brakes or just tapping them?
Right. It highlights that tension, doesn't it? Short-term caution versus that ambitious long-term transformation. It shows agility, maybe, but also adds some uncertainty for the market.
Yet despite that cautious talk, they have been actively upping stakes in renewables, right? And in AI's broadband from AD-Vancy.
They have, and that's rapidly boosting their equity-based power capacity. Up to 13.5 GW now, from under 9 GW in June. It's key to that long-term goal. Renewables going from 13% to 40% of their mix by 2033. The green push is definitely still happening on the ground.
And financially, they can afford it, can't they? The balance sheet looks strong.
Very strong. Net interest-bearing debt to equity is only 0.9 times. That's way below their bond covenant limit of 3.5 times. They have significant firepower for more investment, despite the CEO's recent comments.
And analysts are eyeing synergies too, aren't they? GLF owning big chunks of both K-Bank and AD-Vancy.
Yeah, the thinking is they might try to create links, maybe joint ventures for digital personal loans using customer payment data, a really interesting cross-industry possibility.
Okay. And one more thing on the market dynamics, U.S. tariffs on solar. Is that a worry for GULF?
Actually, not so much, because something like 94% of their electricity sales go to EGAE, the Thai utility, under long-term contracts.
The power purchase agreements, PPAs.
Exactly. That structure really limits their exposure to those kinds of international trade spats. It's like a tariff shield.
Right. Okay, so pulling it all together, what's the general feeling from analysts after weighing all this?
Well, it's fascinating. Despite those mixed signals on new investment, the overall sentiment is pretty bullish. Over the past 3 months, 14 analysts covering GLF have landed on an overall strong buy rating.
Sean buy. And the price target.
The average target is around 61.89 buy baht. There's a range, of course, from 55 up to 70 baht, so some differing views on the exact upside.
But the general direction is clearly positive.
Yeah, and from a valuation standpoint, the stock's trading at a PE of about 25 times, price to book around 1.9 times. Analysts generally see that as attractive, below its historical average.
Suggesting maybe the current price doesn't fully reflect that growth potential and diversification we've been talking about.
That seems to be the view. Plus, you've got some regulatory tailwinds.
Oh, yeah.
The Energy Regulatory Commission's FT fee consultation for Q3, Q4 looks positive for power stocks. Expectations are for stable electricity prices around 3.98 baht per unit, while gas prices are falling, maybe down 4%.
Which is good for margins.
Right.
Nice little boost. Okay, so summing up for everyone listening, what does this all mean for you? We've seen GULF, this really dynamic holding company, is looking set for a record Q2, financially speaking.
Yeah, driven by operations ramping up, those strategic integrations like 80 Vancy paying off, solid dividend income, a lot going right operationally.
And the long-term vision is still clearly focused on renewables and digital expansion, backed by a really strong balance sheet that gives them options. So GULF presents this really fascinating case, doesn't it?
Yeah.
A company trying to navigate global headwinds while still chasing really ambitious growth. Those contrasting signals on investment appetite versus the long-term goals and the strong financials, how do you see that balance? Is GLF managing the tightrope walk between aggressive expansion and maybe cautious investment right now?
And fundamentally, does this Q2 data convince you it's still very much a growth story? Or are those first hints of saturation starting to maybe creep in?
Definitely something to ponder as you watch GULF next moves.